Good morning all, hope you're doing well. So the risk calc pumped on the technicals, but the sentiment, the SSI is increased, so it tells us that they heard a buying on a net average. So the 5 people long indices versus the 1 person selling, so that's really unusual. I wonder whether or not this is telling us something where the technicals are rallying, so perhaps it might just be a little bit of a payday scenario maybe. EJ has just moved a ridiculous amount this week, so be careful with EJ. And yesterday was just a complete out of bonk scenario where the VIX was dumped but everything else rallied, and now the FTSE is going slightly negative now. We know we're at the London Open, so sentimentally risk off, technically okay because we're above 50. QDB scores, I want to talk about the robot a bit today. Because we moved the stop loss distance, and moving it, making it a tighter stop, didn't do us any favours, and it made us get stopped out, perhaps even unnecessarily. So we moved from 100 pips to 75 pips, which you think would be sufficient, but we got stopped out on the Euro Aussie. So I'm going to keep an eye on that, and we might have to go back to our 100 pips again, which would be quite frustrating. Euro CAD at the top. We are positive, we've got a bit more gas left in the tank. Aussie CAD is second, pound CAD is third. We were saying that CAD's going to be fairly weak because we looked at the COT data on Sunday. CAD Swiss bottom, Euro Swiss, pound Aussie. And let's look at the average bubbles, I suppose. We've got the average weekly and the daily, but we'll look at the average today. So they're short Aussie and they're long yen. They're always long yen. They keep buying the yen, so that's going to punish them, and it might punish the Aussie. So let's talk about, yeah, we'll do the robot now because I want to talk about it. And so we had lots of losses from the Euro Aussie, and we had buy triggers, 1665, round about here, okay. And obviously our stops would have got triggered. Let me see. So it's a 91 pip drop from our entry. So if we had 100 pips, you know, we'd have been okay. We would have just been okay there. All right. So it's incredibly frustrating. But you know, in a way, we are testing. You know, we're using demo accounts, so that's fine. You wouldn't want to be going live because the market's just horrendous, basically, and it's really, really tricky. So what I'm going to do is going to keep an eye on this low. If we break this low, we'll need the 100 pip stop loss. If we hold that low, then fair enough. Okay, we might come up higher, and then we keep the 75 pip stop loss. I am very much in favour of having a tighter stop than 100 pips, but I think we might need 100 pip, a wide stop such as 100 pips, just to cater for the absolute nonsense. And you can see how we had support here, technically speaking, okay. So this is going to be a very, very good test for the QDB robot today, is that if this breaks, and we'll just need... we'll keep the 75 pip stop, but if that holds, we'll keep the 100 pip stop loss. All right, so it looks like we had quite a lot of naughtiness overnight because we had the CPI from Australia, so there's that big move there. And so that's the robot. We have encountered a lot of losses because the risk on, risk off fluctuations, and you know, the war in the Middle East, obviously it's going to cause huge ripples, tidal waves of uncertainty, especially escalation with Iran and things like that. And Mitch McConnell in the United States, I think he's retired now, but he was saying that how Iran, China and Russia are the axis of evil, so Iran are now like the enemy in speech marks, okay. So we don't want to see any escalation from the Middle East, and because of that I think we suffered quite a lot on our robot because we had so much uncertainty with risk, okay, whether or not we'll risk on or risk off. So we're going to keep an eye on 16558. If that breaks, then we can change the stop loss distance. Right, so that's my little rant there. Very, very frustrating. Had that have been live, that would have been quite expensive because we had a few EA trades running, so we need to make sure that the stop loss is sufficiently wide enough to cater for that nonsense, basically, and we can see how we are supported. So you might want it to come down to support, you know, technically speaking. So maybe a wide stop, I think. So we'll keep an eye on that level. There's my little rant today. And DAX, we'll start with DAX. So they're selling it. So how legit this candle is, it's probably not legit. It's probably naughty, and we're going to wick below. We've got 35 minutes left of the hour. You know, some time just to do that fake nonsense, and then we'll wick. So this is fake, it coming down because the sentiment is coming down. We know how that's fake. So what should happen is that we're wicking below, and what they'll do, they'll hold on to their bias, and it will go up to punish them. All right, so that's how it works. Okay, so this is currently a bit naughty. We should be seeing a wick below, and so that's DAX. And don't forget we had a channel break. Can you see? So we're using that channel break there. So, you know, technically bullish, sentimentally a buy, but this is just doing a fake nonsense thing. Let's go to S&P. I don't think we did gold. I need to do gold in Discord. We can look at gold. Yeah, this is fine. This can probably fall because it needs to flush out this. This is just like a whole load of dumb money that needs to get out the equation. So this is fine. This should fall because of that. We created a supply, they went long, so you know we have to fall. That's fine. That's not doing any like bogus stuff, but the DAX is being a bit bogus. The DAX might be following the US, to be honest, and that's why that might be falling. And this needs to flush, so this is fine. That needs to fall, so that's okay. Done. DAX done. Look at gold, and I didn't actually do this in the Discord, so we need to make sure I do this. Just they're really short. They're 32% short. Just sideways on gold. So I'll do a screenshot now. It just saves me a bit of time, and I can do it after this video. And that's it. So my little rant with the robot, very frustrating. Ideally, you know, it's actually like a profitable robot, but when we're having these wild oscillations and risk and massive stop hunts, it's incredibly difficult to program. So I think the only way to cater that nonsense is to have those wide stops, like that video I made yesterday. So we'll have to keep an eye on the Euro Aussie. I'll probably need a bit of a break, I think. I might come back by New York, and then we'll know whether or not that level's held on the Euro Aussie. If it has, then you know that's okay. If it broke, then we'll keep the 75 pip stop loss. And that's it. So looks like we might be seeing a flush on the indices. DAX might be a bit naughty, but it might be following the US, and this is why this is falling potentially. You know, we have to think of the bigger picture, is that the US indices they're like mammoths. You know, they're like absolute beasts. The DAX is a very powerful index, but if the S&P is falling very heavily, it's likely the DAX is going to follow. And so we should be seeing a bit of a wick below, but it might be tracking the US, and that's it. So keep an eye on the Euro Aussie today. Very naughty. And we've got the Bank of Canada today and a PAL speech at 8 o'clock, so about 11 hours time. So make sure you're having breaks, and I'll be back for New York because I need a break, because these markets are just they're quite frustrating. And DAX is doing exactly as forecast. We're wicking below because we should be, right? Hopefully everyone understands that. Any questions, let me know. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between, okay? And so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew. But we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think. And like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxside.com, and enjoy your day.